G'day guys, Sam here from Trade the Post, but to give you a crypto review that we're going to look at 3 charts and demonstrate a certain strategy that you can benefit from. These are 3 trades that we took 2 days ago with the rise of Bitcoin or the alt market, and looking for a shorting position really. And using this method, which is called swing failure pattern, we'll look for price entry, and it's a powerful tool, especially in a ranging market. Understanding the context of swing failure patterns is pretty important, understanding the level as well as the macro picture as to what's taking place. So what we're going to do is look at a few charts, highlight to you what we look for the trade entry, and hopefully you benefit from it. You need to know how to trade this method so you can increase your portfolio in terms of crypto accumulation as well as making profit. So here is one example what we put on our Discord, and actually there's 3 of them, and we'll demonstrate how that goes. Look at my Discord. Where is it? So this is Mask. We set it here. So if you look at it from that perspective, give us a sec. We said looking for a swing failure pattern and then coming back down, and this is the trade. So what makes a swing failure pattern? This top of wick amongst context, which is the level, previous top. So this previous top was taken out by this swing failure pattern, and then you see price coming down to a range, and that range you can say, okay, it comes down to 786 on this one. We don't know what the target would be when we enter the trade in most cases, but actually we'll just do this. We can use this level, and it's perfectly on the 786. Now here there is a swing failure pattern or fail auction, and then a reversal. Once we get that defined, that level defined, then we have a new level for liquidity, which is the stop losses, and this takes that out and then comes back down. And with high volume up, it doesn't really matter, does it, with the high volume? But the sell-off is not as there is a bit of volume as well. So you take your chances because the risk to reward ratio is there. Now if you look at that on a big time frame, you can see that we have come down a fair bit. That was a bump and run strategy or a grind line and then dropped, and now we're going sideways. So you would expect it to go sideways still, and we have, for this particular example, in context, it makes sense that we still look to swing failure trades, that we go for the ranges. There will be a point in the market where it will decide that it's the lows will be higher lows. In this case, we are having that. So we're having higher lows, and maybe that was set from that level there. Now you can see that we are potentially in a position where we might come up, and there's that secondary level set up. You can see that level with from a portfolio perspective, that is a strong level to short. So if this gets us another move to that level, that is likely to be a shorting position as well. And then you can see that this is like a bear flag, and then potentially we drop further more and maybe take this out. But we will probably initially take this level out first. So then we might come back up or go further down, and in my case I think this will probably hit here and then come back up. So this might be an accumulation for the bear market, for the long term, but you can see in terms of context and the trade, there is opportunities to do using the swing failure pattern as well as understanding the context. So we can go to the next chart that we called out, and that was ARPA. And so with ARPA we said weekly level and liquidity there. So let's have a look at that. There we go. So when we look at ARPA, we made this call as well. Like we said in this example here, where are we here? There we go. We made that call, weekly level, etc. So when you look at this chart, we also made the swing failure pattern and a good trade as well. So that's what? Let's have a look. So far, that's close to 9%. Again, in the context of price, we look at the overall chart. Bitcoin was roughly at its level of probably shorting. So it was confluent with this level here. So we had our previous liquidity level here, ever so slightly. And you can see that was a swing failure pattern, came back down. Here we had one slightly higher swing failure pattern, would have had our stop losses slightly above. There's also the weekly level that we should have placed in this, but I can't recall originally what chart I had. So that was also a weekly level as well as a liquidity level, and therefore nicely further downs. So now we're looking for, as we're talking, price is likely to come and take this level out, and then we'll see if there's going to be another swing failure pattern. At the moment, I'd like to see take this out or take these out. It hasn't quite done it yet, so there could be a potential trade here. How it's coming down, it's not favorable to do a swing failure pattern, but we want to see it come down lower. Ideally, we want to see it take out the weekly here. We have some levels here, but this weekly, if we see it come down and then reverse, but the problem is once we do that, we might want to find that we do that type of thing, because there's a lot of resistance here, and then we might come back further down or break through, and then that will be another trade. So we have a potential long trade here as well. So what we can do is bring that up, and the second trade potentially ideally what we want to see is probably come up to there. So there's levels of taking profit, I suppose, and we will put our Fibonacci onto it. So if it was to come down to there, and so our first will come up to here, and the second profit taking is up to there. So I'm looking at that perspective. From Bitcoin perspective, we also made that call. We're looking at natural point of control. We had this blue line, and so we weren't sure. This was a good valid position to short, but we didn't take it just because of the nature of the response. It was like that candle came down, and the second candle didn't give us a reason to short. So we made a second call later on. Let me see where it is. Whoops. Oh, bummer. Where is it? There we go. So we made this call, and we placed, so at the time I made the call, we were right here, and right here. I shorted it. There was another call I made that was there potentially to short, but I took that short there because I was confident that if it went slightly higher, based on that would have been a shorting position, and that was a great entry. I missed that entry, waited for the bounce, looked for this level, and then it gave me a reason with this trend line that looked bearish in nature. So that was a good shorting position, and so far so good. So you can see, and we looked at it again for another entry there. So you can see how the context makes, if you understand price movement, and in certain situations, certain structure, you will find confidence to short the market. So we had 3 shorts in and really they're probably better than the longs in terms of finding those trades. So that's what I want to share. Hopefully you get some understanding on what to look for in terms of liquidity and levels, and then for a good trade entry. So please give me a like and share, and talk to you soon.